Japan just went nuclear on the entire global financial system. And you? Yeah, you're sitting on a 30-day countdown. So buckle up. What's coming next is gonna be intense. Could we be staring at the carry trade absolutely imploding in real time? And here's where it gets juicy. Might XRP actually be a major player in this chaos? Listen, I'm cutting straight to the chase here. We're unpacking everything that's happening, laying out every single piece of news and hard evidence. Plus, you already know we're diving deep into the what-if scenarios and where this madness could take us. Breaking: Japan literally just murdered a worldwide money printing machine, and the whole world's asleep at the wheel right now. There's one number keeping finance nerds up at night, and that number is 1.71. That's Japan's 10-year bond yield, highest since 2008. Here's why your retirement just got obliterated. For 30 years, Japan printed infinitely money at 0% rates and exported it worldwide. 3.4 trillion flowed into US treasuries, European debt, emerging markets. This invisible bid kept your mortgage cheap, your stocks inflated, your government solvent. November 10th, 2025. The bid disappeared. Japan's yield hit 1.71%. They're pumping $110 billion stimulus into their economy, while the debt sits at 263% of GDP. The math just became impossible. At 1.7% rates, Japan pays $27 billion more in interest every single year. Here's the extinction event nobody sees coming. Japanese pension funds are pulling $1.1 trillion out of US treasuries right now because keeping money in America loses them after the hedging cost. The largest foreign buyer of American debt is about to become the seller. When Japan stops buying, interest rates don't stay flat. They explode. US 10-year yield will jump 40 basis points minimum from flow dynamics alone. Your 7% mortgage becomes 8%. Corporate debt refinancing costs spike 60%. Zombie companies holding $3 trillion in junk bonds start defaulting in waves. The yen carry trade just reversed. 1.2 trillion in borrowed yen funding crypto stocks and emerging markets must unwind. Every hedge fund, every momentum trade, every leverage bet built on free Japanese money is getting margin called simultaneously. This breaks in 3 places. Stock valuations were built for 2% bond yields forever. At 3.5% yields, the S&P fear value drops 35%. Emerging market currencies collapse without Japanese capital inflows. Europe's debt crisis returns because Italy and Spain lose their silent buyer. December 18th, the Bank of Japan meets 50% chance. They hike rates again. If they do, sell everything, not nail down. Your 401k doesn't price this in yet. The Fed can't stop this. No central bank can. The world's biggest piggy bank just cracked open and the money is flowing backwards. Position yourself accordingly. All right, so picture this. XRP potentially stepping up as the hero in this entire mess. Sounds crazy? Maybe. Let's explore it. Now, Jake Claver's been absolutely obsessed with unpacking this whole thing, and his take is honestly mind-blowing. So what I'm about to do is lay out the core foundation of what Jake's been piecing together, show you exactly how this scenario could unfold in real time, and then once you've seen this clip, I'm going to flood you with so much additional background info that everything's going to click into place. Take a listen.
There's a $10 trillion ticking time bomb sitting inside the financial system, and almost nobody is talking about it. Unless you've been here on this channel, and we've covered it lots of times, it's the reverse carry trade. And when it blows up, we're going to need something that doesn't exist in the current banking system. And that's where I think XRP might step in. This is about financial infrastructure, systemic risk, and why Japan, XRP, and the digital yen might be the only thing standing between global liquidity and a global crisis. Okay, so if you haven't been here before, we're going to go ahead and go over what the reverse carry trade is. For decades, global institutions have been borrowing cheap yen at close to zero interest rates to buy higher yielding assets in dollars, euros, and other emerging markets. So they would borrow that yen from the Bank of Japan, swap it through FX to whatever currency they wanted, and then go put that to work, earning much higher returns. And then they owe 0% to the Bank of Japan. It's free money. And that is what the reverse carry trade is. It's close to $10 trillion in exposure. When rates shift or FX volatility spikes, these positions are going to unwind fast. Investors will have to sell off their foreign assets and rush to buy back the yen. So they'll have to sell in the stock market or gold or wherever else they're positioned, swap back to whatever the currency it was in whatever jurisdiction they purchased it, and then go back through FX to yen before they can repay those notes. So this slams the FX market, the bond market, and credit globally, all at once. So what's going to happen? It's not good, right? It's a tidal wave of capital surging back to Japan. Dollars, euros, and all of the other currencies that people are selling off to swap for the yen crash, and the yen will explode higher. Demand for the yen will be excessive. So US treasuries, they're going to be dumped. Yields are going to spike, and bond markets will break. Global liquidity will evaporate, just like in March of 2020, but much, much worse. The Bank of Japan will have two options. They can either let the yen appreciate and kill their exports, or they can defend the bond market and risk hyperinflation because they're going to have to print a bunch of yen in order to buy those bonds. It's a lose-lose situation, unless they have a third option sitting in the background. So this is where I think XRP might be the missing piece. So instead of dumping foreign assets directly into the yen, flows could be routed from, let's say, US dollars through XRP and then into the Japanese yen. XRP would serve as a liquidity buffer, routing flows around the FX bottlenecks. Settles in 3 seconds, doesn't require correspondent banking, and it could scale globally if price and infrastructure allow it. So let's get into what would actually need to take place for this to happen. You got SBI and the Bank of Japan. They would have to have strategic alignment. Now we know SBI is Japan's largest and most aggressive fintech institution, and they own part of Ripple. So they operate SBI VC trading, and they also use XRP for live FX remittance. The Bank of Japan is developing a CBDC, which has been in pilot since late 2023, maybe 24. And this would allow them to program the stability of the bond market. But they would definitely need a playbook for this. You'd have to route FX through XRP. You'd have to be able to issue or go live with that digital yen. You'd have to offer yield or rewards for people holding the bonds, and then absorb capital inflows without destabilizing the yen or bonds. Okay, so this is a tricky dance. It's not like it's an easy thing to do, but if you had a liquidity buffer like XRP that could expand and contract to be able to mitigate this risk and volatility, it's going to be much easier to handle this situation when it happens. So how could this work? Like XRP needs to have a couple things happen. For $5 to $10 trillion to be repatriated into the yen, you couldn't use traditional FX markets. They would break. You need XRP liquidity pools large enough to absorb and route those flows. So let's do some math. To absorb $10 trillion in 30 days with about 5.5 billion XRP, and if that was turned over 10 times daily, XRP would need to be around $180 per token. This is a mathematical inevitability if it's going to serve in this purpose. The world doesn't need XRP height, it needs XRP liquidity for when this is going to happen. So let's break it down. What are all the things that actually have to happen for SBI, the Bank of Japan, and the rest of the world for this to take place? The Bank of Japan would have to authorize XRP in FX settlement systems. Okay, and we know that they've been building that in the background with Ripple for a long time, so probably in place. SBI needs to build deep liquidity pools between the yen and XRP and USD XRP corridors using RippleNet or the AMMs on the XRPL, which were put out a while back with XLS30. So it's possible. You would also need regulatory clarity in Japan for XRP. It would need to be approved as a settlement asset and also not have capital gains if it's being used in that capacity. You would need CBDC rails to go live with programmable yield to absorb the bond flows. And again, we know that that's been in pilot for a long time, so likely they probably have that in place. You would also need global partners to mirror those corridors for all of the currencies that we're going to be swapping back to the yen. So that's the US, it's euros, and any other jurisdiction where people have borrowed yen to be able to put it into financial markets. And then last, XRP liquidity would need to be locked, incentivized, and scalable. So we need a significantly higher price for XRP for it to be able to facilitate this. And again, there's a lot of ways that that could happen, but you need a supply shock on the asset. If we don't have something like this in place and $10 trillion unwind, you have a credit collapse, you have FX disorder, and you have central banks out of tools to fix this problem. So XRP is perfectly positioned for this. It's neutral, it's fast, it's ready, but it needs the adoption, liquidity, and price to fit this purpose. And again, this is not speculation. This is about the infrastructure. So SBI and the Bank of Japan have the pieces. Question is, will they move in time? XRP, it's potentially providing liquidity and a buffer when there is volatility and global crisis. And if Bank of Japan moves first, XRP won't just bridge currencies. It could be the bridge that pulls us out of the next global financial crisis. So hopefully this has been valuable for you. If you have enjoyed it, please let me know what you think in the comments below. Like, subscribe, and we'll see you guys on the next.
Let me paint this picture for you real quick. Step one's all about setting up the carry trade, right? Everyone's buzzing about the unwind lately. Here's the deal. Investors are basically scooping up yen when borrowing costs are dirt cheap. We've gone over the basics already. Next move? They flip that yen into different currencies, stack up profits, expand their portfolios, and then bam, Japan sees what's happening and cranks up interest rates. So yeah, we've officially hit step 3 in this wild ride. That's when the wheels start coming off and everyone's hitting the panic button. And listen, if you're paying attention, this isn't some theory anymore. It's unfolding right in front of us. Suddenly, investors are having this massive uh-oh realization that clinging to those foreign assets purchased with cheap borrowed yen, that strategy just became ridiculously dangerous and massively expensive. Currency markets turn into absolute chaos, and the yen's flexing its muscles. What's the move? Investors lose their minds trying to bail out of these positions, frantically offloading everything globally: equities, bonds, commodities, the whole 9 yards. Sure, we've spotted some tremors in the stock market already, but real talk, there's still a bunch of other shoes waiting to drop here. Fast forward to the next move: currency volatility and amplification. The sudden selling creates downward pressure on global assets. Markets may panic with major drops in US tech stocks and bonds. Simultaneously, everyone needs to buy yen, causing it to appreciate further. The cycle accelerates as more investors unwind. Assets prices fall faster, triggering margin calls and forced selling. Knock on global effects: liquidity dries up in affected markets, and investors repatriate to Japan. US and European bonds yield spike, mortgage rates rise, and emerging market currencies debt come under severe pressure. Banks and hedge funds are caught in crowded trades that may suffer sudden losses, amplifying the systemic risk. Look, banks are already sweating bullets over their liquidity situation, okay? And what we're seeing now, yeah, it's gonna crank up the pressure even more. Completion and reset. When the bulk of positions are unwound, the yen stabilizes at higher level. Asset prices abroad reset lower, sometimes overshooting due to panic. Global funding flows rebalance, and credit conditions may remain tight for some time as the system absorbs the shock. I mean, wow, right? So here's where it gets interesting. Jake's basically built this whole chain reaction scenario with XRP at the center, and it flows like Japan carry trade unwind, global market shock, institutional pivot to on-demand liquidity, ETF dominoes and supply shock, systemic rotation, and price explosion. That's his blueprint, step by step. But wait, there's more happening here. You've also got the whole tether collapse angle and tons of other moving pieces in the mix, yeah? And that made me wonder, hold up, where's the origin story of this domino theory anyway? Who kicked off this conversation initially, and when exactly did it start? So I went down the rabbit hole researching this, and the foundation of this theory, It actually goes all the way back to 1999. The yen carry trade as a strategy dates back to 1999 when Japan's interest rate was slashed to zero. Academic and financial discussions of the carry trade unwind began around 2008 in the global meltdown. Specific attribution of the very first person or institution used the phrase Japan carry trade unwind does not appear to be publicly referenced, but it was right around 2007 and 2008, which, let's be honest here, is ages before XRP was even a twinkle in anyone's eye. So what's happening? We're basically watching people retrofit an entire economic phenomenon to match up with the XRP timeline. That's the extra context I really wanted you guys to catch. Now, don't get me wrong, I'm pretty sure there are multiple scenarios being cooked up behind the scenes. But hey, if this whole situation actually unfolds the way some folks are anticipating, yeah, XRP might just be sitting at that table as one of the solutions. Listen to this.
When do you think the reverse carry trade is most likely going to happen? I think they need XRP futures in place, and I think they need the ETFs lined up. I think all the dominoes need to be in place. The stablecoin bill is there. It can be passed very quickly. Tether has already pretty much moved offshore, but they've been told that they will be subject to the stablecoin bill and the US regulations. You've got MiCA in place. You've got the UK ready to go with their digital pound and the digital euro in the Eurozone. You've got all of these other large central banks ready to push their stablecoin and central bank digital currency, including the Bank of Japan. The Bank of Japan is ready to go with everything that they need. We're just waiting on oil to skyrocket. I don't know if that's going to come from a shortage or something that happens in the Middle East, but that will cause the Bank of Japan to have to hike interest rates very quickly, and everything will kick off. That's going to be the gunshot that I think is going to stir all this and make it happen. And it's going to happen way faster than people anticipate because everything's lined up, ready to go for when they kick this deal off. So I think after the 19th here in May, I think that's the last piece that they need in place is the CME in order to be able to hedge and profit off of this. You've already got the XXRP ETF, which is a 2x leverage long futures XRP ETF. And then you've also got ProShares, which has launched their long and short XRP ETFs. No spot ETFs yet. I think all the institutions are on board. I think Jamie Dimon and Chase and JP Morgan are on board. I think HSBC, I think the BIS, I think the IMF, I think the Fed, I think the Treasury, I think the US, I think the BRICS nations. Everybody is green light, ready to go.
So parts of this are already getting the green light, right? Some pieces are literally locked and loaded, ready to roll. And speaking of which, there's actually another clip I want to show you here. Take a listen.
If you would go listen to my domino theory videos, I explain exactly step by step how the reverse carry trade would lead to the appreciation of XRP. Mainly, there's going to be huge unrealized losses on the back end of the stock market for the Bitcoin ETFs, and they won't have any other assets to be able to pull from to cure those losses. At this point, Bitcoin for sure has systemic risk because of all the pension funds and other hedge funds and large wealth managers and other people that have made large allocations to it.
All right, folks, save the best for last, or at least the final one. Let me hit play on this bad boy. Listen to this one quickly.
You've described the reverse carry trade many times and how it could happen by the end of year. But if it doesn't in that time frame, do you believe it's still in play in 2026, 3 to 4 digits? Thanks. Yeah, for sure. I don't know how much more confident I can show you guys I am. We've got 4 months left, September, October, November, December. A third of the year left, and everybody's losing their minds that it hasn't moved past $3 yet. And it's not going to be a gradual thing. When this thing goes, it's going to be a vertical line to the upside because of the supply shock that's going to happen. One of the things I found out at SALT that I thought was very interesting, but one of the ETF issuers, they would have had lots of conversations with the SEC for issuing ETFs because they've, filed multiple S1s for multiple assets, mentioned that futures markets need to be live for at least 6 months before the SEC is going to approve the ETFs. So that makes sense for a lot of the delays that we've seen. They felt like Litecoin ETFs would probably get approved first, then Solana, and then HBAR, and then XRP later in October. I don't know that I'm super confident in that exact order and time frame, but they did say that October is when all of those futures markets would be around for 6 months, and
those things would probably get passed. So again, I haven't issued an ETF. I haven't talked to the SEC about it. This person has had numerous conversations with the SEC about it. So I'm going to take their word for it. That makes sense to me. And again, all of these futures markets, even if they were launched on Coinbase and not the CME, they count basically. And so with that said, do we have to wait till October for the XRP ETFs? Possible. Do we, top out and then pull back and go into the bear market before they roll those? Possible. We'll see what happens. But with the rate drop here in the US on Polymarket looking like it's an absolute certainty, and also the Bank of Japan looking like it's going to raise interest rates, that reverse carry trade that seems pretty likely that it's going to unwind at scale in the not too very distant future. It is an inevitability that will unwind.
Look, we've crossed the point of no return here, plain and simple. Japan just broke the global financial system. You have 30 days, November 18th, 2025, Japan's 20-year bond yield hit 2.75, the highest recorded in history. This single number just added a 30-year error that made your retirement possible. The math is simple, and it's fatal. Japan has 263% debt to GDP, $10.2 trillion total. They survived because rates were zero. At 2.75, debt service explodes from $162 billion to $280 billion over 10 years. That's 38% of the government's revenue consumed by interest alone. No nation in history has sustained this without default or hyperinflation. But here's what kills your portfolio first. Japan holds $3.2 trillion in foreign assets, $1.13 trillion US treasuries alone. They bought everything forward because Japan's bonds paid nothing. Now, Japan bonds pay 2.7% after hedging costs. Holding US treasuries loses money for Japanese investors. Repatriation is not optional. It's mathematically a necessity. 500 billion exists global markets in 18 months. The yen carry trade holds 1.2 trillion in borrowed yen funding global assets, stocks and crypto and emerging markets, everything. As Japanese rates rise and the yen strengthens, every position goes underwater and force its liquidation. We're literally living through a massive inflection point right now. And here's the crazy part. All of this is happening right in front of our eyes while we're busy scrolling through our feeds and worrying about literally everything else imaginable. The current financial system, it's teetering on the edge. So the million-dollar question becomes, are we actually prepared for this new crypto era? Pretty wild to think about, huh? Like, are we genuinely ready? Honestly, we're going to get our answer way faster than we think, aren't we? Here's what I know for sure. Whether this whole thing kicks off today, 30 days from now, or somewhere in the next few months, XRP is positioned to play an absolutely massive role. Now look, some folks out there are probably sleeping on just how huge this could actually be, while others might have their expectations cranked up a little too high. But you know what? Either way, we're in for an absolutely wild ride, and I'm sticking with you the entire way. So let's navigate this thing side by side, and I promise I'll keep you in the loop with everything. Drop your thoughts below, guys. I'll see you in the next one.